Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Thursday, February 8th, 2017. So the Bulls put in a pretty good run today, and it's not surprising because that's what we are expecting to take place this week, and we still see the kill zone that's going to be coming. It's going to catch a lot of people by surprise, and typically what happens before we get these big moves to the downside is we get the rally that has everybody chasing, and that's pretty much the mode we're in right now. So if you don't know when to expect the drop, the Bears get very frustrated because last week looked like it was the breakdown. We even put a question mark whether the top was in or not. But that's not really part of our newsletter. We really don't, it's not a matter of, oh, the top is going to happen here or there. It's more on the time period that when to expect the top. And when you have the technicals that are supporting whether it's going to be a bounce or a drop, then you start paying attention to where things are going to reverse and you look for some type of confirmation. But the big moves, the reason why so many people miss them and so many people are caught on the wrong side is that these dates are always in place, and what happens is that everybody doubts that anything is going to happen. The bears that are waiting for the breakdown, and then it gets bounced up, they get squeezed out, and from there they don't believe that the market's going to go down. And then the bulls that are waiting for a pullback and they see it going up and making new highs, um, they start believing that they have to chase because the market's not going to go down. And from that point, we have both the bulls and the bears on the same side where they're not anticipating any type of drop or not expecting it. And that's pretty much what's needed for these kill zones and these black holes to occur. They're not going to take place when everybody's expecting them to head down, because it just doesn't work that way. That's the psychology of the market. So everybody has to be on the side that is not going to go down, and this is the phase that we're in right now. We've been saying that tops are they're frustrating because you get this sloppy mess of a tape that goes where you get a big range going up and down, and everybody jumps in when they think it's a breakout, and then from there it drops down, and everybody jumps in on the bearish side, and then it bounces back up until everybody just throws their hands up, and then from there we get the massive drop. And one thing that I want to just point out is that we started sentiment timing, I believe it was in 2013. Every single one of these big drops was predicted by Woody Dorsey ahead of time, and the one that is approaching right now, again, this was predicted going back right before the elections. So this is the type of information that that's there. So let's go over. I'm gonna not really go over a whole lot because there's not a whole lot to go over. But this is our February 2nd newsletter, and this is what I'm talking about. Um, so the best profile for the short side is made during the kill zone. That's what's approaching. That profile is still, I can't give you the date, though a top seems to be, it could be in. Now this is where we start, going into where the Trump rally is in a transitioning stage into rolling over. And this is what we've been saying. The whole thing is to try to control your emotions, because if you're expecting something to happen and it doesn't and it doesn't and it doesn't, you get frustrated and then you walk away. But when you kind of have an idea when to expect it, then your emotions are intact, and when you take the strength and you use it for to be, to build a short position or scale out of your long positions. And then when the kill zone hits, you're mentally prepared for this. So it's a rollover process. It's going to take some time, and it's going to resolve into a defined decline kill zone. So that's what's coming. Now, this is where I'm saying what's taking place this week is it was kind of anticipated. So the Trump top is going to set into a spring break. Investors may buy that dip. So as much as we're saying that this market's going to drop, you're going to be able to buy this dip. Now, the good part about it is that there's going to be a secondary Trump top, and that is going to make a wonderful decline. So the kill zone is the first part of it, and it's going to make a great buying opportunity. But once it pops up, there's a secondary kill zone or black hole that's coming, and that's what's going to make this year so fantastic. Is that there's going to volatility is really going to be stepping in. So last week, a rollover to the downside seems to be beginning, but may not still get traction right now. In fact, the profile allowed for renewed rally mode upside stabs next week. That's this week, and that's exactly what has taken place. So it's challenging, and that's why things are difficult to be able to pick a top. So on my end of it, on the technical, I'd mentioned on Tuesday a lower low would create a bullish divergence, and there is a 50-50 shot that the S&P is going to close the gap above. So be careful jumping short down here. So again, this is last Thursday, and the market was going down, and we were warning not to get too aggressive on the short side because the timing part wasn't there. So here we are, and this is what's taking place right now, and everybody should know exactly what's happening. And this is the beauty about knowing what to expect. So just the S&P on a 15-minute chart, we got some bearish divergences on this move right here, but we had some bullish divergences at the lows, and this is what we were talking about. And we got this rally, and my thing is I was anticipating that they were going to close this gap. They did it in a pretty quick manner, but we have some bearish divergences now, so it may start to dwindle on the upside. On the 60-minute chart, we have bearish divergences, and really the structure, wave structure is 1, 2, 3, 4, and now we're making a wave 5. And when that completes, the kill zone is probably going to be taking the S&P someplace between the 2170 and the 2132. Now, it could go lower than that, and this is a daily chart because we have bearish divergences on the daily, and we also have a pretty large bearish rising wedge. So we're not calling for a new bear market. We're talking about a drop that's going to take a lot of people by surprise, but that drop is going to set up a great buying opportunity that's then going to come up and make a secondary top that's going to set up another fantastic shorting opportunity. So I'm pretty excited about 2017 just because of the amount of points that are expected right now to move up and down are fantastic. And as long as you know how to control your emotions and know what to expect, it makes things pretty good. So if the bulls head higher, maybe they do it. I'd keep an eye on 2312, 2115, 2315. The bears, what they really need to do is get it through this support area, and that's going to be through the 2301 down to the 2297. If they get through that, then we should see a move down to the 2289, and then if we start breaking some support levels, then we start seeing some panic moves, because remember, the bears are out on this move here, and the bulls are chasing. So everybody's on the same side that this market is heading higher, and that is what sets up the big declines that we're anticipating. It's going to be bigger than this, but this is what sets up the kill zone, and everything is going as planned. So with that, maybe next week is the kill zone, maybe it's not. I think we have 4 more spots left open in the special that we ran last night. And with that, until next week, have a great night.